G'day folks, welcome back to another update for natural gas. Now we did project a bounce or a bullish divergence in our last update. Now that bounce has occurred, but we're still overall a bit in a bearish momentum to the downside, so just be cautious about going long. So before we go any further, make sure you hit that like and subscribe button to support the channel. As of today, 29th of April, in terms of AI demand impact, the rapid expansion of AI technologies and data centers in the US is projected to significantly increase electricity demand, with natural gas anticipated to meet over 130 terawatts, I think that is, of this increased load. This surge may strain domestic supplies and infrastructure, potentially elevating prices and impacting LNG export competitiveness. In terms of geopolitical events, geopolitical tensions, including the expiration of the Ukraine-Russia gas transit agreement and the new US sanctions on Russian energy, have tightened European gas supplies, increasing reliance on US LNG. However, EU methane emission regulations and US policy shifts under President Trump are adding complexity to international gas trade dynamics. So again, looking at the long-term trends, we always look at the trends on all different timelines. On the monthly, the price is broken above the moving averages, giving us a bullish momentum. Likewise, the CCI 150 on the monthly is broken above and been that way since around September last year. But notice this month, a bearish candle, so it's pulling back at the moment on the monthly. On the weekly, likewise, it's pulling back and it's broken below the moving averages of both the price and the CCI, giving us a bearish momentum on the weekly. On the daily, it has been bearish now for some time. We've got this CCI 1500 indicator, which helps smooth the trend on the CCI. That's been declining and still in a decline. And notice at the moment, though, the CCI 150 has broken into that moving average band. The price is still below the moving averages, so I wouldn't call it bullish at the moment. It's still overall bearish. And we'll look at the intraday time frame to get a better idea as to what's happening on the micro level. So we'll look at the 1 hour time frame here. And again, we only go in a direction. We only trade in the direction of the higher time frames. If you're trading on the 1 hour or the intraday, take predominantly short trades. Now at the moment, you'll notice here we did draw this bullish divergence in our last video, higher lows on the CCI, and that CCI kept rising, and the price kept dropping. Now that actually dropped a bit further to where we were previously, and you can see there it's actually broken up and hit that minimum range. That target range would have adjusted as well slightly because of that little drop there. So if we drew a fresh Fibonacci range, it's actually very little change. So it's the same period basically. 23-38% minimum range. You can see there it's hit it perfectly. Now this could go either way. It could actually keep rising, or it could actually break further to the downside and continue short trading. So again, just be cautious. I'd like to see this confirm and break to the downside, start taking short trades again, but especially the daily to break below that moving average band. Or alternatively, if this starts breaking higher, we'll keep an eye on the hourly, of course. But then if the daily also breaks above that moving average range, I'd like to see these moving average bands curve up, but especially I want to see the price as well break above those moving averages. Now if we go to the back testing, let me just get rid of that Fibonacci I've got here. Starting from that period on the daily, you would have taken short trades only. This is the 1 hour time frame. I've got the stop loss approach and the average down approach. And basically, beginning during that period back there, around about the 11th or 12th of March, you would have taken the stop loss approach, would have broken below your 100,000 as a baseline 100,000. I allow 100,000 because sometimes we look at Japanese yen, which is in the tens of thousands. So if it shows you there, it broke below the $100,000 baseline, and then it finally broke above it again. And that's on the stop loss approach, and it's generated so far about $300 worth of transactions or trades. The average down approach, same sort of deal. We had a bit of a drawdown there below the 100,000. Otherwise, today it'd be returning $1,135. So it looks like it's lost a bit. It got up as high as about almost $4,000, but because of that break, you would have stopped taking trades when it hit that moving average band there. So it would have been very close to it there. Actually, you might have got out, if you're following this on the hourly, you might have got out near the top there. If it gets really close to that moving average band, I like taking the profits off the table. So don't let it cross too high into that moving average band to make it profitable. Now again, as I said, that is this as a result of this bullish divergence, and we want to see where it goes from here to just wait and see before it take any long or short trades. So for BOIL, that's already bearish on the monthly. There's no CCI for it drawn. So still a bearish momentum. It actually hit that moving average band and it's bounced back to the downside. On the weekly, we did have this bullish divergence on the CCI versus lower lows on the price, and that actually broke up through those moving average bands and made new highs compared to the recent highs there. And that's now dropped below that moving average band on the weekly. You'll notice also the CCI 150 has actually broken into that moving average band, so it's giving us a potential bearish. But currently it's neutral, but it could actually break to a downside if it starts turning, if that indicator starts turning pink or red. On the daily, again, you'll notice here, similar to the natural gas commodity price, it's actually broken up into that moving average band, and that price is still below the moving averages. So somewhat neutral on the CCI, but still bearish on the price chart, hugging, trending towards this diagonal descending trend line. And you'll notice down here we've got this CCI 1500, and that's still predominantly bearish as well. Going to the intraday chart, again we take predominantly short trades, again similar to the natural gas commodity price, where this bullish divergence, and that CCI is still rising, and that resulted in this bounce, and it hasn't quite hit our minimum target range yet, that 23-38% range, and it may very well at least hit this descending diagonal trend line and possibly even break further to the downside or keep it rising. So again, we'll keep an eye on that, but at the moment it's predominantly bearish on the daily or somewhat neutral, but a slight bullish bounce as we projected since our last update. Okay, for KOLD, it's the inverse charts. So on the monthly, still bearish on the monthly price charts below the moving averages. The CCI hasn't actually drawn yet. It's not enough data in that to draw it. On the weekly, it has been bearish now for some time, since around about December 2024. But we've had a bit of a bull run, or a few weeks of bullish candles there. Hit that moving average band on the weekly. The CCI broke above the moving average band, but still predominantly, I would call it neutral to bearish momentum on the weekly. On the daily, it's actually hit this, it bounced, and that was a result of this bullish divergence, similar to the commodity price. It's actually bounced, and that actually looks like it possibly just kissed that 23-38% range. So it came very close, and it's bouncing now back down to the moving average range on the CCI and also the price. So again, I wouldn't be going long. I'd like to see the higher time frame also break a lot higher to be more bullish. So at the moment, we'll go to the intraday chart. If you're trading on the intraday, you can go long. So again, but just be cautious at the moment. I'd like to see this break above that moving average band to be more confident. This could actually continue further to the downside. And that was a result here on the 1 hour chart. You'll notice here we had a bearish divergence versus higher highs on the price. Broke down, hit our 23-38% Fibonacci range. And at the moment, still bearish on the 1 hour time frame. So again, I'd like to see this convincingly break above that moving average band on the daily, or break below it to be more confident about going short. So for you, actually broken above that moving average band, but notice how we just did a false break, then it's broken back down again. That's why I'd like to see these moving averages curve up if you're going to go long, or curve down like in that period there to go short. It's a bit too premature to go long at this point. As you can see there, it's actually pulled back down on the monthly, so always make sure the moving average bands also move in your favor. On the weekly, it was bullish for a number of weeks, and it's finally broken below that moving average band, and so is the CCI. So again, that moving average band is starting to narrow, and very likely we're going to see further declines on UNG on the weekly. On the daily, it's actually broken below both the price and the CCI moving averages, but again, similar to the commodity price, you'll notice it's pulled back into that moving average band, although the price is still below the moving averages. So predominantly still bearish, but turning neutral at the moment on the daily. Looking at the 1 hour time frame, similar to the other charts, we've also got another bullish divergence here, higher lows on the CCI versus lower lows on the price. We didn't actually draw a target for this because it was still a bit early or too premature to track. I'd like to see it break a lot higher and then draw a target, and that would have been from that low. We can draw it now. Let's take it back to that level, to that significant high there. So if we were to draw a minimum retrace, we expect it to get probably somewhere close to that 23-38% range. Now that's at that wider Fibonacci range. Although if we did take it back, let's say took it back to there, you can see it's already hit that 23%. So it depends where you draw these. They're a bit subjective sometimes, but I like to take it back to the recent high before the divergence started, which that would have been one of those 2 points. And you can see there it's just touched that 23%. So if it does pull back again, then that target was hit. But again, I'm just pulling it back to a significant high to give it a bit more leg room. So again, try to pick sort of the major highs and lows. Again, I don't trade these, so just be cautious. I wouldn't have bought that. I just use it as a potential area. Once I see a divergence, if I was going short here, I'll see this a potential area to get out of any short trades. So if you're new to trading, we're now including a weekly video series, Pizza Investing Plus One, as part of the Pizza Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. And if you enjoy the content and help keep me motivated, keep these videos going, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Think of it as sitting down with me over a cup of coffee. Thanks, and talk to you in our next video.